1630 or something like that. This also, the reason I also went with this, because this was 1624 was the 23% back on this area. So at the time, the market topped out at 1630, and then we had our support at 1578, and the market bottomed at what, 1570. Oh, okay. Let's go on and move on to the news. And be just one moment. I had started up the webinar early, and well, actually not early, but I had gone with the a different link, so trying to get my iPad going so I can make sure that everything's running okay. So anyway, let's go on and move on now here, and we'll get into the news, and then we'll get into the coverage and the webinar. It says the Australian New Zealand dollars edge up against a weaker greenback. The Australian New Zealand dollars eked out gains against the greenback on Monday despite low trading volumes due to the start of holiday in Australia. Some of the previous week's strengths in the dollar had worn off, and looming deadline in Canadian-U.S. talks or we're working the North American free trade agreement. We're waiting on the greenback. Well, we know that the news came out that they were going to go with that agreement, and Canada would be part of that. The Aussie had found support around 72, but analysts warned it would remain vulnerable, giving ongoing global jitters could dampen commodity currencies, and we are seeing gold slide back in. We had actually once again did the analysis. We did make up that run after breaking 1197. In the analysis, basic technical analysis, where I put my analysis, we talked about 1197 now being resistance, and this is where the market basically ran out of gas, and we've come back and trickled back down. But it says the Aussie risks remain to the downside, given the confluence of FOMC, U.S. review of China tariffs, and Euro-Italy budget risks. Across the Tasman Sea, the New Zealand dollar drifted higher, but lingered below the one-month high of 66.96. Tuesday will bring yet another economic confidence measure. The New Zealand Institute of Economic Research will be out. The results could move the Kiwi higher if they confirm a separate ANZ Bank survey's indication last week that business confidence was lifting off 10-year lows. And let's go on and move on to sterling. Rises despite fears of the Troy Brexit conflict. The pound rose after Britain's finance minister said on Monday the European Union was willing to do a Brexit deal, but investors said uncertainties around the ruling Conservative Party conference could quickly reverse the currency's fortune. 6 months before Britain is due to leave the EU, traders are focused on events like the conference and an upcoming EU summit for signs on whether the UK will clinch a deal. Deep divisions within the party could turn this conference into a disaster for May, which could easily have negative effects for sterling, said Tu La Wen, FX strategist at Commerzbank. The government might end up without any Brexit plan whatsoever, whichever way one looks at it, the next few days will be uncomfortable for sterling. Finance Minister Philip Hammond told BBC on Monday the mood is undoubtedly that people want to do a deal with the UK. The pound is up 2/10 versus dollar to 30.50. We could see any dips in the pound and around the Tory conference as an opportunity to buy the currency with a deal on the Irish border backstop to see a sharp repricing of 136 to 138, says currency strategist Viraj Patel. Hammond said on Monday that doubts about Britain's future have already hit the economy in the next few weeks would be crucial in securing an exit agreement. Many businesses are sitting on their hands, frankly waiting to see what the outcome of this negotiation is before confirming their investment plans. Last week, Britain's opposition Labour Party sought to woo business bosses, although the proposed was a raft of radical economic policies, saying the Conservatives had given them the opportunity to pitch an alternative leftist strategy. And the Canadian dollar jumps after trade deal. Euro struggles. And as we said, we did see this market really pare back. It was already sliding on Friday quite a bit. And I'm looking for a move potentially right down here. This 27.53. We'll pull this back. Right there. You can see all the touches coming across here. Right there. 27.53. And not that far away, as I mentioned. When you look at the daily, to 27.26 being the 50% of this entire move of 20.62 to 33.84. Canadian dollar jumps after the trade deal and the euro struggles. The Canadian dollar rallied 0.5% against the dollar on Monday as investors rushed to buy riskier assets after the United States and Canada agreed to update the North American Free Trade Agreement. Trade tension has dominated currency markets since April, boosting the dollar and pushing down currencies of trade-dependent countries from South Korea to Mexico. The latest news prompted traders to cover some of their extreme short bets. Sources said direct knowledge of talks confirmed the two countries' recent agreement, which involved offering more daily access to U.S. farmers and Canada agreeing to a side letter agreement effectively capping automobile exports to the United States. Appetite for risk-taking is a bit firmer in the backdrop of the trade deal, though the spotlight will be firmly on U.S. jobs data on Friday, which will indicate whether wage growth has picked up, said Manuel Oliveri. Apart from the U.S. jobs on Friday, PMI data will also be closely watched. U.S. stock index futures gained while Japanese stock markets climbed 0.5%, indicating risk appetite wasn't confined to currency markets. Sentiment has been more subdued in the European session. Italian bond yields surged in opening trading on a report the European Commission was set to reject the Italy's budget plans in November and open up a procedure against the country's public accounts. Speaking of which, Italy's bond yields extend last week's rise on budget concerns. Italy's bond yields rose sharply on Monday, extending last week's moves, as Moody's report suggests that Italy's budget proposal was set to be rejected by the European Commission. Italian government bond yields and banking stocks were hard hit on Friday after Italy's ruling parties, the anti-establishment Five-Star Movement and right-wing League, proposed a budget for 2019 with a budget deficit target of 2.4% of gross domestic product. It's quite clear that the European Commission will not like the budget proposal, says Commerzbank rate strategist Michael Lester. Brussels will give its opinion, which we think won't be positive, and the rating agencies will opt for a similar stance. A downgrade is our base case. TRIA moved to temper concerns that Italy's enormous debt pile, 131% of GDP, would continue to grow, saying on Sunday investments would fuel economic growth over the next 2 years and put debt on a downward path. Elsewhere, Eurozone bond yields were 1 to 2 basis points higher as the last gas deal between the U.S. and Canada on Sunday to salvage the NAFTA pushed investors to riskier assets. And weak German data points to growth slowdown in third quarter. German retail sales fell unexpectedly for the second month in a row in August, and factories shifted into lower gears in September. Household spending has become a key growth driver in Germany, where consumers benefit from a record high. The economic environment for consumption is still excellent, but many traders are worried about U.S. tariff disputes and many conflicts with the federal government. Chancellor Angela Merkel, ruling coalition, has quarreled over asylum seekers, immigration, and right-wing extremism over the past month, which brought the government close to collapse. And lastly, gold prices slip as the dollar firms and Fed rate hike view. Gold prices remain dependent on the dollar. In this juncture, the U.S. economy has been rosy and better than expected. Efforts by the Trump administration to reduce the trade deficit from an economic point of view has been friendly for the greenback as well. And we are seeing gold, pare back. We've done the analysis on the website for gold, and we had pointed out here that this break of 1197 was key, and this is exactly what we'd be looking. This would now be our resistance, and we're starting to see this market just roll back again. We still have a downside target of 1179 with a stretch down here around 1174, and we'll move on to the buyers chart. So let's go and take a look at the euro. And I posted this in the Asian analysis. So some people, I think they weren't even aware where I was posting the analysis. They asked me in the Asian session where I was yesterday. So I just had it here on the basic technical. The euro 2-hour likely to retest support at the 1580 level. 1557 is a 50% of 1302 with a stretch intraday at 1536. Pair needs a 2-hour close above 1658 to negate the downward momentum. Same thing here. So this is where I post all my analysis here. Same thing here with the cable. We did cable, gold, the dollar index, the Japanese yen. Same thing on the Japanese yen. We're actually looking for, we have a daily up there at 1423. But here was the analysis here for the gold market. Key support of 1197 is now resistance. The downside target of 1179 remains with the stretch to 1174. The shiny metal needs a 2-hour close above 1208 to stop the bleeding. Gold would require a 2-hour close above 1219 to turn the mode bullish. So that 1197, as I mentioned, is now resistance. And as we move back in here, and then I've got the chart posted with each analysis on the Asian update. So as I said, we're likely to retest support at the 1580 area. That's actually where we went to. Let's move this out of the way. So we revisited this 1580. This area that we talked about on Friday, and why we had our support actually at the time at 1578. That area did go on hold, and you can see here we've come up to the 1619 level where we've kind of eased back a bit. One of the things I had mentioned, I was meeting with Mike this weekend, and that's Beans in the chat room. We were talking about the euro, and one of the reasons I had also looked for support on Friday at 1578. Well, not only is it key, but we'd fallen so far off. I wasn't sure how much further we can push down. Things are just, mixed here with the euro because I think we've done so much technical damage on the way down here that it's hard to get people to want to go on and want to be long this market. As I mentioned here, we take a 2-hour close above 1658. Just to get things start to moving back up again. So I think any moves here, if someone was long, maybe they got long from at 1658 or here, I think they would use opportunities probably to go on and just even up. And I think the market is going to be a bit of a doubt, especially with the euro, with the Italy situation working as an overhang. This seems almost too enticing. I think right now the only thing we can do is just look at the levels. So at this point, the only thing is if we break here, this 1580-ish area here, and this is actually 82, this level, it's hard to think that they would just stop. I mean, that here's the stretch move that I was talking about, the 1536. I think this may hang around here maybe for a couple of days. After you've, when the market is falling hard like this, market has to kind of find its own footing, get a feel on how things are going now. Well, the big news at the end of the week is going to be non-farm payroll. I don't really see the euro turn around and taking off this way. If anything, it's probably likely to slide further back. We are holding at this 1611, but I think any moves back up in here, I think they'll be looking as opportunities to go in and sell into this. When we look at a fib, one of the reasons I had actually played the euro long early in the session on Friday and then exited out a little bit too early. And I put in the room that we're looking for resistance at 1606 and 1623, or 1623. You can see this is where it actually stepped in and shorted this. I actually thought, I don't know why I had 1624. That's why I think it was 1624, and I shorted was 1622, I think it was. But this is where the market ended up running out of gas, pairing back. But I was out before the close on Friday. But the point is I'm looking at the 38%, and that won't come in until 1663. I don't see, unless they get some good news or something, I don't see where there's the impetus to move this a whole lot higher. And I think that anybody that's stuck, it will use any opportunity to go on and exit. So let's go and move this out of the way. This is going to be the resistance right here, 1648. We'll pull this back, see a little bit clearer, right there. That'll be the resistance, 1648. I don't even give it to 1658. It would require 2-hour close above 1658 just to finally get rid of this downside momentum. As far as support, we're going to go with 1552 right there. And 1557 is the 50% of the entire move here of 1302 to 1850, 15, I should say. We'll go with 1552. We do have a stretch target down here, 1536. But I think that any dips down there, depending on what part of the week we're doing that in, if we're going in towards the non-farm payroll towards the end of the week, then we could definitely go on and stretch down here at 36 if the market gets bearish. Right now in this 2 hour, we got a little mini, like a mini little doji. It's not even very long at all. Let's pull this back. Generally, you get something, and this isn't very long at all, but you'll see the market kind of pair back. You can almost refer to this as a spinning top, but probably more likely for the market to go on and test back, especially if we can't find any buyers up in here. So we're going to go 1552. I think we're just in a mixed area right now with the euro. I think you've knocked quite a few people out of the box, and I don't think anyone's believing this to go higher. It is very oversold. That's the only thing. So I think we could hang around here. We might even pop this stop here and then find ourselves running out of gas around 1640 and then eventually start working a little bit lower. So I think it's a little bit of a tough market to trade right now, but we'll put this down to 1553. And let's go and move into the cable. Okay, our analysis on the cable during the Asian update was after a breakdown from the pivot level of 30.56, and here's that breakdown right here. Market to target 29.56, which is confluencing with 29.59, which is 161%. Upside resistance, we're putting it at 31.03. A little bit of mix back in here. They got that conference coming up. The market's trading, in a sense, a little bit quiet for the most part, but we did get this little hammer bottom. They've tested. They haven't gone beyond 50%. Generally, when you get a hammer bottom like this, you don't want it to go beyond 50% of this range. So they're holding above that, but I still think there's an opportunity for this market to get down here. I think that's your risk here. This 29.56. This happens to be also 161% of this range. See there? So we have a bit of a confluence right there. So if they do slide, that's the target line, 29.57. Got a level there, and also a confluence with the 161% of this range here. And the market still remains bullish. Upside, as we said, is going to be 3103. I don't see any reason to change that. I mean, from the Asian update. So it's going to be 3103. And let's go move into the Aussie. This has continued to stay relatively weak. I'll take a look at the 2-hour chart. Unless this thing completely breaks down, there's always a possibility, but on a short-term basis, you can see right here, this level coming across this top. Looks like some pretty good volume coming in right there, 65.90. The market seems to be dripping lower, drip. So it may just go and take one quick dip and then pop back up. This is where, the 61%, but we did bounce up to 50. So generally, if you defend it, which, I mean, we bounced, but we came back down. There's some additional one, but for right now, market's trading relatively quiet. The Aussie could be actually in even worse shape for the most part. But let's go with 65.90 today for support. And that's actually, I apologize, talking about the Kiwi. And resistance. It's going to be right there. 66.44. Not that far away, but once again, any bounces, this is where we would have the stops. Things was going in, changing. You get a much further run than if we can go in and get beyond that 66.44. And that's where we had it before. Let's go and flip into the Aussie now. Well, here's that key level here, 71.86, and this is what we'd be looking at for support. 71.86 right there. Resistance is going to be just a hair above the 72.55. You can see where the market has a body here on this close, which is right there. Call it 72.61. So we got some room up there for the market to go and move. You think about as bad as the whole tariff situation is, at least over the very, very short haul, the Aussie dollar isn't doing too bad. And my point being, it could be a whole lot worse. But resistance would come in at 72.61. Obviously, the mode still remains bearish. We'll just move that 1 pip higher. And let's go move into the dollar CAD. Here's our resistance here on the dollar CAD, where I think that the market is going to go on and try and make a move to this 27.58. And when we look at that, you can see the level coming across. You see all the way back here. So that's from coming up with 27.58. And you can see some good support there. So I think there's a potential for this market to use that as a target to go to. Certainly things have turned very bearish in a very short order. Well, if you remember, we had our resistance at 30.93, and we had 30.96 was, I believe, the 61% of the move back, and we saw a potential stretch, I think it was to 31.20 or 31.23, but they actually ran out of gas just about 10 or 9 pips away from that 30.93, and from there we have really come under a lot of pressure. I think some news must have leaked out that they were potentially going to make an agreement, which came in to fruition last night, because that thing really came apart on Friday. But I think that, once again, I think the market would like to get down here, this 27.58 level, before all said and done. So that's going to actually be, as oversold as this, that's actually going to be our target, 27.58. Our target will look for support. And you can see this 27.53 coming across here on the 2-hour chart. That's actually even more clear than the daily. You can see all the touches and the battle zone here. Resistance looks like that'd be 28.42. Pull that a little bit closer. We'll actually move that a little bit higher right there. 28.52. 28.52 in case we get a quick little short covering rally. It's 28.52 that'd be key on the upside for the dollar CAD. But we do like this area here for the market as a magnet to track to. And let's go move into the dollar Swiss. We already had a heck of a run here in the Swissy. You know, we got past this 98.04, and that was no small feat, which is even beyond the 50%, which was 98.06, and we still made a continued move higher. We've gotten as high as 98.47. Key area here is 98.57. We're looking at the daily. Let's go move into the 2-hour. Well, that's where we stopped at, which is going to be our resistance. Right there, you can see that body closed 98.43, and they got up as high as 98.47. Not that far from this key area 57. We'll go with this 98.43. We're still not that far away. I mean, you think about it. Here we are, 98.31. They can still make a run for this key area. 98.57 with just a little bit, 61. Hey, well, we'll go with this 98.57 as being key. 98.57 is going to be our resistance. It's had a heck of a run already. Support is just going to be below this key 98.04. Let's call it right there. 97.91. Or actually 97.92. No, it's certainly not bullish by any stretch of the imagination, but if we're able to hold in this area here, certainly we're going to be able to change this to a range, but it would have to hold here for at least for another day or two. Now let's go move into the dollar yen, and boy, what a run this thing has had. I was looking at it and I'm like, now it's finally playing catch up to what the move that we've seen here in the bond market. One of the complaints we had is that the dollar yen hasn't reflected the move in the bond market and seemed to be diverging from that inverse relationship that it has. Now, here's that key level that we talked about, goes all the way back to 2009. And we got above it and looked like we're holding, and here we are starting to slide back. Well, that's just giving a little bit of ammo for the dollar yen. And I looked at it. I wasn't a believer of this thing, but I tell you what, it's continued to move higher. Here, I remember taking a short at 12.23 and then got stopped at 12.52. And that was going to be on a 2-hour close. We actually came down, it defended it, then it came back up, and I was able to get out. And I didn't want to touch it after that because it just didn't, I didn't believe it, but it didn't make much sense. But here it is from a technical standpoint. It continues to move higher. Now, obviously, we ran into some 2-hour resistance at 14.08, which I didn't even see that, but I was looking at the daily, but we'd have to add some more data. But I had that 14.08 level. But there's been other levels here that look like it was going to hold it. What I did was I looked at it on the daily, and And this one I'm looking at here is 1424. And 1543 would be the 78% if it made that run. But to me, it's right here, this 1424. And there's still a possibility we can make that move up there. I have, having a hard time believing the dollar yen, but you can't doubt the word is. Remember, we talked about it when it defended that 1166, and it continues to motor higher. But you can see here this 1424. And actually, it came in because you would look at the bodies, and it would be just a little bit hair lower. But when I pull this back, right there, you can see these little touches coming across. So at least for now, that's a short-term target, 1424, which this 1543 is even bigger. To me, like I said, I don't get it what the dollar yen is doing here, but the point is it is here, and now it's playing catch-up to the 30-year bonds, and the 30-year bonds are still under pressure. I think we're overdone here, but they still remain under pressure for right now. So our resistance is going to be 1424. Support would come in right there at 1337. So let's go move into the cash dollar index. So one of the things that we talked about on Thursday was in cases, what we'd be looking at, and I thought that the dollar index would eventually work lower, but we said that, hey, if we get a 2-hour close above 94.68, that pointed the door for 95.20, and certainly it went to 95.20, even went beyond 95.20, and this is where the market stalled here on Friday. This is actually, on Friday, this was our resistance on the cash dollar index, which is 95.32. The high was actually 95.37, and we had our support at 94.96, and they found support at 95. Now, one of the things that I was looking at also was the daily. And since we were able to close above 94.97, here's 94.97, we close above that, it really opens the door for the test of this 95.65. I don't know that it's going to get there, but the point is that it's open. This move above 94.97 has opened that test for 95.65. Whether it gets there or not, I don't know, but I think it's tricky. The same, just like the situation is for the euro. The euro, we were just seeing it just a little while ago, up there at the 16.19, and I think that this market is still open to rolling back and having to test down here. So when we take a look at the dollar index, we get past this 95.32, certainly is going to hit some stops. And I'm saying get past 95.32 on a 2-hour close. You know how important 95.32 has been. And that's what I'm saying is you're looking at 95.68. Whether we get there or not, but that would be the area. So that's actually going to be our resistance. And actually it's a daily close. They got 95.68 on the 2-hour. I'll go here with this daily being 95.65 as our resistance. Well, let's go back into the 2-hour. We'll go with this 68, 95.68. And all I'm doing is just respecting the technicals right now. Because we got that 2-hour close, remember, above 94.68. That opened the door for us to go higher. And then with that daily close above 94.97, that allows this market to make the next challenge. Support. It's going to be right there. We're going to call it 94.94. Just 2 ticks below Friday's support. But as I mentioned, this has been a huge area. We've used this as a key level for, God, about a week and a half or so, maybe even almost 2 weeks at 95.32, and that's held like a champ. Once again, if it goes on a 2-hour close, we're certainly going to go and try and make that move higher. Let's now go in and take a look here with gold. We're still pointing for lowering gold. Let's go into the daily. This was just a huge break, and to me, it just feels like the gold market is just kind of stumbling around right now. With that, you're basically sitting in mud. You get a car stuck in the mud, and you you put it in drive, and your tires are just spinning. You go, okay, well, I can't go anywhere and drive. Let me go in reverse. You put it in reverse, and your tires are still spinning. That's how I feel the gold is now, because we really knocked a lot of people out of the box. I know that I was looking, it was set up for a bullish mode. And remember, we had said on a little bit longer term basis, we liked the area down to 1204. That area held as long as it didn't go, a 2-hour close, even though we're looking at a daily at the time, a 2-hour close below 1197, and 2-hour close below 1197 did come to fruition, on Friday. And this really opened the door for this market to go a whole heck of a lot lower. And lower it did go. Things started falling apart in the Asian session and kept on going. So we found some support right around this 1184. I saw this on the daily. I mentioned on Friday ago, I know there's some support there. I couldn't remember where it was. It was actually here on the daily. You can see these closes right there. That's where they found some support. But one of the things we did in our analysis, and we opened up here pretty close to where we closed on Friday. There we go. And on the analysis, we pointed out that 1197, which had been support for the market, was now going to be resistance. And we opened up pretty close to that on the Sunday session. And since then, we've just rolled lower and lower and lower. And so Our downside target remains the same, which is 1179, with a potential stretch down here to 1174, 73-ish, right there. Obviously, if the dollar makes its break higher, and it's certainly trying to make that push, that's going to weigh on gold and probably open. I want to say open the floodgates, because I think the floodgates came here when we broke 1197 and went with that 2-hour close, and you saw just a heck of a lot of selling. But it does open the door for potential move down here to 1179 with a stretch, as I said, down here to 1174. So our resistance to the Asian session, which is 1197, I think we have to adjust that now on a shorter term basis. So resistance now is going to come in at 1194. See that here. We had 91, and they really broke them up higher on Friday and made that run back up towards 97. I think we ran out of gas around 1196. Well, our downside target is 1179. The market was a whole heck of a lot weaker on Friday before it recovered. We're going to have to leave this 1179. That's a heck of a long ways away from this. If you're looking on a very short-term basis, resist support is going to come in at 1185. But you have to be careful on this one, because if the dollar does break higher, and certainly it's acting like it really wants to go on and move higher. And as we mentioned on the daily, with the daily close above 94.97 on Friday, it certainly opens the door for this market to challenge the next area. And you know, this market has been bumping its head up against 95.32. We did get up to 37 on Friday, but we couldn't get past this 95.32, which was our resistance. Before the market actually slid back to 95 even. I thought it might make it to 94.96, but it made it 95, and then we started working higher. We've come back. Now we're taking a dip, but look, the dip has only been slight. So really giving the market, from a technical standpoint, the opportunity to push higher, and push higher is exactly what it's doing right now. So if that's the case, then we can quickly slide here into gold, even further pressure. So we're going to go and keep this 1179. There's some support coming in at 1185, though, but we're going to keep that support at 1179, the downside target. Let's go and move into the 30-year bonds. Yeah, just when it looked like we were starting to recover a little bit, we don't want to take another dip back here in the 30-year bonds. So this is a bit of a surprise to see this weaken again, but we'll go on and go with support right there. 39.23, which is actually just a pip lower than it looks like what they went to. So they went to this area. I'll show you right here. So just about a tick lower. So we'll go with 39.23 for our support. Resistance on a short-term basis is going to be 40.15. See that coming in right there, which coincides with this top right there. So it's 40.15 for resistance on the bonds. And the bulls have been all over the place. This would be support here at 58.33. And let's take a look at it on a fib. And 58.32 would be the 61%. But we've already tried to put in a hammer, so a little mini hammer. So if we break here, it seems like we would push even further, but we'll go with 58.32. It's a long ways off. Let's just go with the level right here, which is 58.65, which is still about 10 ticks away, which is about a couple of ticks higher than the day's high. And let's move into the DAX. Nice bit of a recovery here in the DAX. Resistance is going to be right there at 12,340. It's just above that 50% where they stopped. Support. It's going to be just a hair lower, which is going to be not that far away, 12,265 to start out with. 12,265. And that concludes the bias chart. Dale should be here. And thanks for joining us here on the European crossover webinar.
GM Paulie. Oh, I mean, good morning.
Hey, good morning, Dale. How you doing?
I talk in text talk now. GM. How are you, buddy?
I'm doing good. How you doing?
Good, man. All right, let's have a great week. Thank you, Paulie. So we get to talk a few more days and before you go private. So thanks very much, Paulie, and everybody. Let's have a great week. Who's up to having a good week here? Give me a Y if you're with me, because I have plans, okay? So on the weekend, you make plans, right? And then you don't have to execute, analyze on the fly. You're ready to execute, put the trades on. And if you have this in your head before you click your mouse, I hope this one works. Let me show my charts here. Don't do the trade. It's the wrong attitude. The attitude should be, I've done my work, Mr. Market. I know why I'm getting in. I know the contingencies. I know if they're negated, I'm out. I know if I'm right, what I'm looking for. Go ahead, Mr. Market. Prove me wrong. Okay? So that's the attitude you need when you go into a trade. Not a defeatist one. Well, I hope this one works. And, you know, something else I want to point out, if you want to make progress as a trader, you need to take responsibility for Poor performance, mistakes, everything. Own it. I hear a lot of people say, "Oh, I got burned in the yen." Well, it wasn't the yen that burned you. It was your thought process, your trading plan. The yen doesn't care. It's not out to get you. It got me last week. In fact, when you talk about the yen, C was talking about 114. We're almost there. All right, so let me go over a few market things that are on my radar. So last week with this dollar rally here, we confirmed the highs. So I'm looking for potential shorts in the dollar, longs in the euro, still like EG. We'll see if it could hold the lows. Should the dollar head up towards 95 and a half, 95.60, it was a real important pivot here on our way up to 97. And then once we got back underneath it, right? So it was having problems like I am. So we have a confirmed high. I'm looking for potential shorts, 95.50. Let me try it again. So right across these levels here. All right, big pivot. So we have a little inside day going, which is fine with me. I wouldn't mind if we hung out in here within Friday's range and then try and push higher on turnaround Tuesday towards 5.5, which would mean taking out today's high, Friday's high, and then taking out today's low and Friday's close, I think would fulfill the picture. And then if we have some kind of equality from 5.5, like we had from here, that would take it down to, 2.5, which is something a lot of people were talking about. Now, Blake talked about, a lot of people were looking for 120. Those people, 119, 120 could still be right, but of course, they were wrong the market or wrong the trade, and they got shaken out. Okay, so the guys looking for higher numbers in euro probably aren't there anymore. I'll just key, because the euro is such a big part of the Dixie, and I'll probably trade the Dixie. I'm just going to time a euro trade when the Dixie gets up to those levels. I don't know, maybe we're going to try 115. This possibly, could have been, when you look at it, yeah, I'd like to see one more low. So just like the dollar, we have confirmed lows. So let's see what happens at 1560, 1550 in the euro. That would be an interesting area for me to consider. Let's see. I also tweeted yesterday with, strong market celebrating that we have NAFTA 2.0. I think we were about here last night. And I said, don't buy the market because of NAFTA, because by Tuesday you could get the SHAFTA. So last week I talked about the off numbers, right? And last week the off number was 2903, which the market held again on Friday. Here you go. 2903, held it all week long. That's a 2-week off number. So, you could have traded off it. The reason I bring it up is, as strong as the market is, to have a 2-week reversal, really all you need to do is the 2-week off numbers, 29.90. So despite all the strength, we're only about 2 handles off the off numbers. So pay attention to that Friday close in the S&P. Unlike NASDAQ, which is making new highs, well, it looks like we could do it here in the S&Ps too. But the NASDAQ so far is the only one that made a new high, and it took out these highs by about 4 or 5. But, here's a little cautionary note here. Now, you don't have much divergence on the shorter term, but look at this. We made new highs, and compared to the last high, momentum is much weaker. Everyone see that? I know I'm the boy who cried wolf. Everyone see that? And then I want to just touch upon, we've been talking 75 crude and the reason why, looking for a third drive to a top. Here's one, here's two. That could happen this week. I was taught by an old market veteran, two of the sectors that lead into a turn or a top in the market, usually techs and oils. And that seems to be happening. The flight to safety trade in the FANGs continues to work. Everyone with me? You don't have to agree with me. I just want to make sure you're getting what I'm saying on these instruments. Could I have a why that you're with me? Modern cars can have more than 3 drives. Yeah, I've seen many, many, many. So, I get tricked too. You think it's a third, it turns out to be a second, right? Okay. And then I just want to wrap it with, if you believe last week was real in the precious metals, and, I have some good news for my good friend and trading warrior, Stelios, because, I know Stel's a silver bull. And even though we're pulling back here today, I view it as a buying opportunity, and I want to show Stel something. Yeah, actually, I, bought some, telling people to buy some at 14.45. I think the low was 6. Anyway, I wanted to show you this daily here, Stel, because if we could penetrate this 50-day here, real good shot, viable, $16 silver.
I like that.
You like
morning,
that?
Man.
Yeah. Oh, yeah, he's not older. No, you're right, Ziggy. I'm the oldest guy in the business. Yeah. In fact, you remember me telling you the story when I had lunch with W.D. Gann and Jesse Livermore that day. I brought my ticker tape. All right. So that's silver. So I think pullback should be bought there. And gold too. I mean, gold turned. I talked about 1181 for weeks when we were distributing, moving sideways, saying that, looking for the 61.8 level. There was no magic in it. Just looking for this to be like an A and this to be a B. And we could have a, sharp bear market rally of a quality here, which would take it to about 1235. Okay. Then you could also get some type of fib extension, and some of the guys are looking for 1280, much higher levels. I'm viewing this mainly as a bear market rally, but, in your face bears. We saw that commitment of traders look from Dylan at Simple Trends. I've been around a while, as Ziggy says, and I don't think I've ever seen the commercials not short silver. Okay, not short. That's very unusual. Also, we know people have been talking about it for months. The COT and the gold is still very constructive. A lot of the shorts probably think after they turn the gold back that they could be okay, just a little bounce and, we're going to fail again. They could be right, but we start penetrating 1200 here and they're going to start to squeeze them. They might squeeze them so hard, their eyeballs will pop out. So that's what I have on the markets. I have a question to ask everyone in here, and then I'm going to hand it over to Blake. Let's say you're not a member of ForexAnalytix. Okay, so this is for people who really, they just come here for face. I'd like to know if face has helped you in your mission, helped you make money, helped you learn different trading ideas and techniques and methods to make you better. If that's true, why don't you give me a why? I know there's many. Let's see what kind of integrity the crowd has. Okay, so there's a few. Okay, so let me ask you this. If this is helping you, it's only the tip of the iceberg. Why not have the whole iceberg? And for you, the ones I'm addressing right now that have given me a why that come here, this is how to support having a free webinar for others that are trying to find their way in a world full of barracudas. Thank you, Joshua. Appreciate the business. So, guys, you have a couple of days left. They extended this. You won't see these prices for I don't know how long. Okay? You're on board. Tom's on board. So this is for the people that love Face and haven't subscribed yet. Even if you just test it out for a month. And I do think October is going to be a fairly important month. There's been a lot of market history in October. So let's be part of history together on a few of these moves and become a member. That's your way of saying thank you, Blake, Steve, Stell, Grega, Andre, Dale, Joe, Amanda, for your help in what is an arduous and difficult business. So with that, I'm going to turn it over to Blake. And also one last thing. Sometimes, you know, and I'm thinking about changing where I have my stock account right now and FX account, TD Ameritrade. You just get used to being somewhere. But, you know, I've seen there are better places for me to trade than there in my right here in the States. Okay, you know, where you could even have more coverage. I could also trade futures and everything else that you can't at TD Ameritrade. So there, you know, sometimes we just get comfortable, and even though maybe we're paying more than we have to or everything else, you know, I'm a creature of habit too. It's hard to move, you know. I'm not big on change, although I've gone through many changes. They're usually forced on me. Anyway, don't forget to get in touch with our sponsors. And if you're overseas, you could be part of the reimbursement program where, you know, you're becoming a subscriber and just your trading takes care of it. So ready to kill it with you guys next all this week, and looking forward to October. And thank you everyone for hanging out with us every day. I know I love it. Oh, I have a great interview. You got to stick around. This guy is an author, prolific writer, analyst, has all the credentials, and he's going to be talking about Europe. So this is right. This too, it's kind of like your day, Stell. Silver, if it could break through that moving average. And Daniel Lacal, I'm not sure if you've heard of him, but we'll be talking Eurozone and what he's seeing there. And he's written some great books, and maybe I'll ask him for a suggestion on what would be most useful that he wrote for the current market environment we're in. Okay. Hi, Blake. I heard you had a busy weekend, buddy.
Yeah, it was one of those weekends where we had kids revolving through our doors all weekend long. So, and I just had to drink
fun,
beer.
Man. Fun.
It was, yeah, it is. It keeps young, I guess. You know, a lot of news, big news this weekend. We got a new NAFTA. It's called USMCA, which I'm not a really big fan of the acronym.
What is it?
U.S., Mexico, Canada.
Oh, how creative.
USMC is the United States Marine Corps.
Oh, that's right, Blake. Yeah.
So I'm not a big fan of this USMCA. It doesn't
USMCA, right?
Yeah, it's like exactly.
Like the YMCA.
Back when you used to sing the Village People, Stelios, it's exactly right. No wonder you like the song.
It had to be. It had to be the president's idea. He even though he didn't want to go, he really does love the military. So probably his idea. Just a guess.
I guess. I'll
write him.
So
I know it breaks the rules.
It does. It really does. So anyway, we got this new agreement, and from what I'm reading, it's not and probably one of the reasons why we haven't seen a huge or bigger reaction is it's
almost like the old one, isn't it?
Yeah, there's a few different key points. There's a few things that they still have to iron out, but the dollar Canadian was already moving lower based on the optimism that this was going to happen. And by the way, I did on Friday. It was a little irritating actually. I bought the dollar Canadian at I think I bought it at like 129. My average was 129.60, and by the end of the day, I closed out at like 129.30, and I took it off the table because my gut instinct on Friday was, hey guys, I'm going to close out this position. I'm going to take my loss, and it wasn't too big, but I'm going to go ahead and take my loss because I'm afraid they're going to put something together by the deadline. And apparently the market was thinking the exact same thing, and that's what created the gap lower. As NAFTA, or USMCA was created, and the dollar yen or dollar Canadian, spiked down to through the trend lows. We gap below the trend lows, and we've moved lower. Now we are finding some support at the 127% extension of the August lows to the September highs. So we are finding some support here, and there's a press conference today. President Trump and Trudeau from Canada are also having a press conference. Now I don't think it's. I think they're separate press conferences. It's not a joint. I believe it's I'm assuming Donald Trump's going to get out to talk about the benefits of the new deal, and I'm interested to see what Prime Minister Trudeau says from the Canadian side. He might say that, hey, there's a new deal in place, but it's not much different than the old deal. So it's going to be really interesting to see what the two different messages are as they're released later on. Anyway, what I do want to point out here is that the dollar Canadian is pretty close to some key support here. Now I'm going to also reference this longer term chart. Notice where we're at. Okay, this is obviously pretty critical on a closing basis this week, because this is a multi-year trend line, and we are here. I think being below the 200-day moving average, which is approximately 128.50, 128.60, and we're well below that right now, or at least by 50 or 60 pips. It remains bearish. But if for some reason we get back above the 200-day moving average, I would be kind of nervous about being on the short side of the dollar Canadian. I know we've talked a lot over the last couple of months, actually last few months, that with a new Canadian, or a new NAFTA deal, the Bank of Canada could have the ability to be a little bit more hawkish. But I think the market has been pricing that in, and if it's not, if Wall Street looks at the nature of the deal and decides that, it's not too different than what we had, the downside might not be prolonged. We might actually see a buy the rumor, sell the news. So I think it's too early to identify buy the rumor, sell the news. Not being an economist, not knowing how the market, how Wall Street's going to respond to this whole thing. But I think we need to be very careful about price action down here. Okay. One of the other things is the markets. You take a look at the S&P. Obviously the S&P is up today based on optimism that there is a deal put in place, that they met the September 30th deadline, and the S&P is higher, and same with like the Dow and the Nasdaq. All the equity markets are cheering. They are off of their highs this morning, not significantly, but they are off their highs, which should be noted. Now, some of the other key developments that I wanted to bring up before I turn it over to Steve and Stelios and the rest of the team is that, I talked about the euro in the week ahead video. If you didn't get a chance to listen to the week ahead video, I told you I'm really indifferent about the euro. I'm not committed one direction or the other. I think there's better opportunities elsewhere. So I'm not really focused so much on the euro, and because I think the euro has played both sides of the market pretty well. And I think both sides of the market, whether you're bullish or bearish, have been played not in a good way either. I think the market had become, quite bullish. The euro dollar got smacked around. Now the market's probably getting a little bearish. The euro, I'd be a little hesitant about being on the short side here. We've got head and shoulder patterns developing on both sides of the market. Bullish and bearish head and shoulder patterns. You can see this, like we had this inverted head and shoulder pattern didn't play out. We had another longer term head and shoulder pattern trying to, still push us higher, but at the same time, longer term, we have a longer term head and shoulder pattern trying to go the opposite direction. So what I'm trying to what I'm trying to point out here is it's very choppy, and it's, I don't have any idea as far as clear-cut direction. That means the dollar index is going to be a little bit more murky for me moving forward. Now, if you haven't read the blog, so if you don't have to be a ForexAnalytix subscriber to read our blogs, but the blog post that I put out over the weekend was U.S. equities and bonds may give the Forex market a hint. It's worth reading because what I do talk about is more so is the yen, and I think it's important that we pay really close attention to the yen. The daily sentiment index on the yen is very extreme. It's at 10, which is a very, very weak reading in sentiment. And when you get such a weak, extreme sentiment reading, that means the market is extremely bearish. The yen, as we're pushing up against some really key resistance around this 114 level. So, and sentiment can flip once we get to these extremes. So it's a contrarian indicator. What I am looking for is I'm looking for bonds to, if they catch a bid and if equities roll over, I think the dollar yen's a good short up here, or, you could start playing the yen to the long side. And the thing about this market is it's squeezed the heck out of anybody who was short the dollar yen since last Thursday. So the market has now hit the 127% extension, or really damn close to. I had an order at 114.06 that did not get tripped overnight. Our highs are 114.05, and I'm a little irritated that order was left unfulfilled because I wanted to short just ahead of this 127% extension. But I think if we get back below 113.20, then the risk of a reversal is quite high. And that's why I think we should, just keep an eye on like what's happening with equities and what's happening in the bond market as well. The bond market isn't doing much because the bond market's pulling back as stocks are up, but that could change. Today's Monday, you got, everybody's excited about NAFTA or, USMCA. And so bonds are a little weaker, stocks are stronger. But if we see this trend reverse going into this, maybe into turnaround Tuesday, like into tomorrow, we could see the, yen start to show a little bit of strength, or the dollar yen start to show some weakness in the next, 24, 48 hours. So that's something that I'm paying pretty close attention to. The cable's a little weaker this morning. It's trading pretty heavy. The Kiwi's trading pretty heavy. I mean, we're near our 50% retracement here in the New Zealand dollar. The Aussie is very, very contained at the moment. But we had weaker Chinese data over the weekend, which is not going to do the Aussie dollar bulls any favor. So, you gotta watch, the Aussie not being responsive, the Kiwis not being responsive, the cable still is trading pretty heavy, and the euro is just kind of flat. I'm not really like I said, I'm not super excited about the euro one way or the other, but watch dollar yen, watch the dollar yen, watch the bond market, and watch equities today. Equities are bid up, but there's a good chance that we can have a buy the rumor, sell the news, and that wouldn't just be that wouldn't be just held to the US dollar Canadian. That could be to the markets in general. The markets have been waiting for this NAFTA deal forever, and everybody knew it was going to get done at some point. So now that it's done, how do the markets really respond to that at this point? So anyway, so those are just a few things that I wanted to discuss. Now, one other thing, and this is more housekeeping. We did extend the offer for ForexAnalytix, and we did that because of more of logistical reasons. But so that's good for you. It gives you guys all an extra, actually 2 days to take advantage of the offer. We only do this once a year, so to take advantage of the offer, make sure you click on this link right here. It says new seasonal offer. You can see all the pricing. We don't, like I said, we do this once a year, and it is more logistical. So you guys are going to benefit from that, because we are moving Paul Franco, or SPZ Trader, Paulie's webinar is going to be exclusive to ForexAnalytix subscribers only. And so we're logistically trying to make that happen. So again, you guys get to benefit from that. So make sure you sign up. If you haven't signed up, take advantage of it, because if not, it's going to be a while before you see prices like this again. And with that being said, I'm going to see if Steve and Stelios are here. Stelios, are you here?
I am here. Hello.
Hey,
good
Blake.
Morning. Hey, Steve. How are you guys doing today?
Good. How are you?
Good.
Good. It's as no one sees what happens behind the meat making machine over here at ForexAnalytix. It's been a busy weekend for us, but hopefully everybody else had a great, relaxing weekend, right?
That is very true.
All right. Well, we've got this NAFTA deal. Or I'm going to have a hard time saying USMCA.
Call it NAFTA, man.
I guess. I
NAFTA,
guess.
NAFTA too. This time it's personal.
Good.
This time it's personal, right? Well, we have this new NAFTA deal, and if you look at the dollar Canadian, the dollar Canadian's down 100 pips, as you would expect that there was a positive response, but are you guys surprised that we're not down even more?
Actually, you know what? This is something we discussed in the chat room earlier today, and my take is that I thought it would have been down more, but the question is, what does this new agreement entail? And I mean, unless you guys have found, a lot of details on this, I personally haven't. They talk about dairy and automobiles, but it's still quite kind of vague. So I think the market's still waiting to see what the details are going to be before it makes a decision one way or another, because it could be very comprehensive and it could be, like a cappuccino, all froth and no substance. So, it's,
Hey,
I personally think. Sorry,
espresso coffee in it. It has absolutely substance.
Yeah,
That's a bad example.
you know what I mean, though.
Unless you dip a Bitcoin in it, right?
Yeah,
and it has no substance. All right.
So that's my view. I don't know what Steve thinks and the others, but that was my view, and it remains until we get more details.
No, I agree with you, Stelio. I think the market is definitely.
Didn't you guys get pummeled by a storm this weekend? I was seeing on the news that there was
actually, we had like a little cyclone, and they say little because we don't have extreme weather phenomena in Greece, so don't compare it to anything you've gotten used to there. In the US, I mean, it's absolutely.
So they had 17-mile-per-hour winds and some light rain.
Yes, something like that. But for us, it was too much.
Yeah,
nothing like those storms, Blake.
The other good thing with Greece is because Greece has a decent seismic activity. All buildings, etc., are concrete. So actually, you don't really see any real damages from phenomena like wind. You know what I mean? Because actually, the building has nowhere to go. I mean, it's not wooden stuff, etc. So that also helps to not have a lot of damages when you get something like that, which is extremely rare.
Okay. Well, glad you've lived through the great storm of 2018, and I gotta get going, guys. So you guys have a great session. Good luck to everybody, and make sure that if you're not a ForexAnalytix subscriber, get in today while you can. All right, thanks,
Blake.
Thanks,
Blake.
See you later, Blake. Bye-bye.
Steve, one more thing I want to talk about before you take over.
We have the time, so go ahead.
No problem. The other thing which happened this morning, actually, and which saw sterling getting a little bit of a hit. Sterling opened up quite strongly, but now it's back to unchanged roughly. Is that Dominic Raab, the Brexit minister, was speaking, and he used some very strong language with the EU, which was interesting to say the least. So he said that, and I quote, the EU should get real and reach a deal, and that they have disrespected Theresa May, and that the UK will not be bullied into signing a one-sided agreement, which is, it's strong words. And this goes back to what I've been saying for days and weeks now, is that we're still in the poker phase of this thing. They're still holding the cards. Nobody knows what the other side has, but it's becoming more two-sided now. So before it was all the EU attacking, and now the UK people, I don't know what what's on their minds or what their plan is, but they're becoming much more aggressive. So this is interesting. I remain bullish the pound. I know a lot of people don't like it, but I am still bullish the pound, and I'm personally short euro sterling from just above 90. And
speaking of which, I think that pound here is at an interesting level. 130 is definitely an interesting level. It's a horizontal support resistance area. Obviously, it's also a psychological level. I mean, it's a round level. The 50 DMA is just a few pips below. We also have that ascending trend line support. So, I don't know how this is going to work out, because I have to say that so far, this move up to 133 doesn't have any impulsive characteristics. I was actually long, and I got trapped into believing when we actually reached 133 that we might even see, a big recovery towards 136. So I ended up taking less profits in that small long I had than I actually could have taken. But seeing now this whole structure higher, it's really not, doesn't look like something more than a correction. Of course, can a correction just extend higher? Yeah, absolutely it can. And if the cable actually finds support at 130, sure, it still can. By the way, I just want to say, because I always like to keep, prior structures, because sometimes you see that, in a weird fashion, they come into play later on. And, a good example for that has been the cable and this ascending channel. So the cable was actually recovering after the Brexit within this ascending channel. And as you see, just by keeping it in there and extending it, we found a low at the extension of this ascending channel's resistance that acted as support. And in this case, the rejection from 133 also confluenced with the extension of that same channel. So we had a nice confluence of resistances up there. It was that trend line. If you connected the highs from this little recovery, it was that extension of that channel. 133 was anyhow a horizontal support resistance area. It was also at 133.17, we had the 38.2% fib from the whole move lower after finding a high at 143.77. So, quite an interesting level to get rejected from. So I really think that a push below 130, sorry, even if you're right, even if eventually the cable moves higher, I think, it will put the cable in danger of actually pushing to a fresh low before actually we can talk about like a bigger recovery, right? So, that's what I want to say about it.
Steve, gold's coming off, recovering pretty good from, it was down about $6.07 earlier, coming back. Looks like it most likely held like, 61.8 back or something.
I don't know if you've noticed lately, there is a strong pattern with gold getting severely beaten before the US session opens and then recovering. So I don't know exactly what kind of a deal that is, but that's another example of that, right?
Okay. Anyway, I was looking for 81. We had that nice pop and this pullback on a shorter term chart. You'll see what it looks like. Like we could be in a C or 3 from today's low.
Yeah, let's see. One thing is for sure, gold still looks heavy. And, I think that only, a daily close above like 1205, 1206 will actually, make it look good again for an eventual move to 1238. That was my target all along. I mean, a rebound towards 1238.
Well, but I think you'll see. I think you'll see it because measure just equality from what we had in from the low at 1160. Tack it on to today's low, and that gives you your 1235, whatever.
I'll cover the metals, but before I forget, okay. Dale,
I'm sorry.
I wanted to also cover, and I know that it's a pair that interests you as well.
I saw the movie Goldfinger last night, and I'm just so excited about gold. I love only gold.
I love. By the way, I love all James Bond movies. Not all of them, but the vast majority of them are nice to see. By the way. I wrote it earlier in the chat room. Today, I actually bought Europound.
Good one.
Yeah, and the reason I did that is this is a 4-hour chart. You can see here an inverted head and shoulders formation. If we look at the daily, I say that because Stelios mentioned it. If you look here at the daily, you will see that this was a very nice confluence of supports. It was the support of this ascending channel. That we kept on following for quite a long time before we overshot it on the way up. It was the retest of the breakout channel that was holding Europound for like 9 months or whatever it was. So I found it a good opportunity, and I actually bought it at, if I remember right, it was like 88, 87, something like that. Because with a very, very tight stop loss just below 88.60, which is not the kind of trade I usually take, but I was doing like the key levels, and when I do key levels, I go down to the 4-hour chart, and it was like I anyhow liked that breakout, and the way you remember we had this conversation together, Dale, that we said that kind of a daily candle and the move we have been moving, the way we have been moving lower. I was
like
really
a coiled spring, the way it was grinding.
Yeah, exactly.
Like a wedge,
I didn't really believe that the market is going to completely dismiss that daily candle like it never happened. You very rarely see that. So
it made you doubt it by going 78.6, even a little deeper than that. It tries to make people doubt it, and I think by 78.6, most people gave up. Not us, though, bro. Not us.
By retracing that much, it also gave an amazing reward to risk opportunity, right? Amazing. I mean, I usually trade like with a longer term view in mind. At least a few days, and very often my stop losses are like 100, 200 pips. And for me to take like a trade with like 30, 40 pips. By the way, speaking of which, it seems to be reversing. Let's see, Stelio, something happened. Honestly, did we have some kind of news, because the cable seems to be rebounding very strongly?
Oh yeah, look at that. So much. Oh God, I hate Europound.
So Stel?
I haven't seen anything yet. I'm
That's
checking.
big.
Something came through the wires for sure, though.
Yeah. UK set to plan compromise on Irish border to get Brexit deal.
Yeah, there it is. There it is. Yeah, you know, the usual tape bomb that we get in these cases. So, so as we see, 130 seems to be holding once again. Very nice reaction from the 130 level. As I said, 130 is big for the cable. If it loses 130, especially on a daily closing basis, and you know, a little bit lower as well, the 50 DMA, I really think that, you know, we could easily be looking for new lows. But if we actually do manage to rebound from here, you know, we can keep open the window for more upside. Okay, so 130, very, very key. That's why I actually started by talking about that. Okay, seems to be reacting now. Good thing I'm not ever using like, you know, my stops are always on a daily closing basis. So let's see what's going to happen to that. So going back to the euro pound, for me, euro pound holding this area, the 88.60 area, is very important, because if we actually do lose this 88.60 area, if we close anywhere below 88.60 on a daily closing basis, that's obviously going to be bad news. First of all, because we completely retrace like a candle that was a very nice bullish reaction to, you know, from a level that we actually expected, you know, something to happen if the pair wanted to actually hold, you know, a constructive bias. And then this looks like a false breakout. And usually false breakouts, you know, are extremely, extremely dangerous, because they can show you that now the market that has been cleared, you know, on the other side, it has now a lot of freedom of movement to move the opposite side. The same situation, speaking of false breakouts, applies, and I already talked about it some time ago, for the pound kiwi. That the pound kiwi, here it is, with this, let me also close this so you can have more screen. Okay, the pound kiwi with this breakout from this symmetrical triangle. I mean, we were building this symmetrical triangle for quite some time, and then we finally break above it. We get like, you know, continuation as you would expect. We then, you know, break to new highs, and we get a very strong sell-off, and we come down and retest this breakout level. So at this point in time, you know, that's a very critical juncture. I remember I talked about it, you know, that immediately the day after we got that big sell-off, I said that, listen, you know, two things can happen from here. One, we you know, plunge back in the channel, in the triangle, in which case, you know, that breakout gets invalidated, and most probably that's going to be a good signal that was the last hoorah from the market, and we might be going a lot lower, or we actually rebound from here and we hold the breakout after retesting it. So far, it has held, okay, and that should keep you, you know, quite constructive as long as this breakout trend line is holding. But once and if we get back below that, you know, I would be very, very, very worried about it, right? So the same deal, the exact same deal is with the euro pound. I mean, we broke out, we came back, we retested again and now again the breakout level. But if we actually like get back in the previous channel in one case and triangle in the other case, you know, I think it's, you know, it's a very dangerous situation, and the market can really completely reverse. So, you know, having talked about that, I know that Blake covered. By the way, I wanted to remember, I think that Blake didn't mention it, so I wanted to mention it myself. Blake wrote a nice blog post. You can visit it here. If you go to ForexAnalytix, to the blogs section, it's free. Perhaps he mentioned it, but, you know, I wasn't here all the time. There is a nice blog he wrote about equities, bonds, and everything else. So, you know, I really propose that you go ahead and visit, even if you're not a ForexAnalytix subscriber. This is a free part of the site, in which I'm not going to obviously just reproduce what he wrote there. You can read it, but anyhow, I can tell you in essence that, among other things, he was mentioning the importance of this ascending trend line support in the S&P market, right? So as you see, we held that once again. So, you know, so far so good for the bulls. There's no question about it. But keep in mind that if we actually like lose this ascending trend line, and, you know, we see some equivalent moves from the bond market, then USD yen should also fail. Speaking of the USD yen, if you remember, I said that once we clear this 133.17 area, then the next upside resistance is at 114.10. We almost, I think we came even closer than 10 pips away. Let me see. Yeah, we actually came like 6-7 pips away from testing that area. We almost tested that today. Keep in mind, I'm also monitoring this ascending channel, which we seem to be overthrowing from at the moment. But bottom line, I would be a little bit careful here, because I know that Blake mentioned at some point the DSI, the yen's DSI, which also shows that sentiment is quite one-sided at the moment. So I don't think this is the place you should be buying the USD yen. I had said plenty of times that if we actually break above 111.50, 113.17 should come quite easily, because I saw no real resistance between 111.50 and that. Then we actually even breached the 113.17 area. But I think that the pair is due for a pullback, even if that ends up being like a little pullback. I mean, what would a little bit pullback be? As usually, a retest of the broken resistance and support. So, for example, we can just like pull back, retest this 113 area, 113.17 area, and then get more upside. But obviously, buying up here doesn't make much sense. Now, I know that I mentioned. Hey, Greg, I didn't know you were going to be with us, but it's a nice surprise regardless.
Yes, but we are not scared that you will lose your words. You're talking so much about dollar yen.
So it's a nice surprise having you, because we missed you last week. We have like 12 minutes ahead of us, so I'm not going to waste any time. I'm just going to pass the screen immediately to you. And I want you to tell us, there you go. I just passed you the screen. I want you to tell us what have you been monitoring and what you feel better about at the moment in the markets. What you feel more strongly about?
Most strongly is probably gold. I really like the gold, how it's acting here since start of August. You can see that we have seen a very slow but still deep pullback towards 61.8%. What I really like is that this support was found on Friday at this area of a former wave 4 here, and so far we have seen a very nice bounce. So this rally, actually, even if it's still just a small bounce, it makes an overlap with the previous very choppy waves. So I think that this is first evidence that after all, this is a corrective pullback, that bears cannot stay here for long, and that bulls will sooner or later be back in control. And this could come in play, especially if we consider that the previous rise was in 5 waves. So this was
I'm still long.
Sharp. Yes, and this was a very sharp move, and you can see that this is very slow pullback. So for me, that's a very nice bullish setup, and I think that we may see a third leg to the upside, probably wave C, which may retest these lows from this was from end of 2017. So I'm looking for a push into these levels. Now, even if you would track different wave count, okay, and you would say that this is maybe wave 1, wave 2, wave 3, and wave 4, you would still expect even higher prices here for a corrective rally, because corrections are structured by 3 legs. So I think this is wave A, B, C. But you never know. Maybe I'm wrong, and this will unfold as a wave 3 of some other very bullish aggressive count. You never know. So short-term setup, I think it's very clear for me. I think that we may see move to the upside. Also, I'm looking at the euro dollar. Despite a very aggressive sell-off on euro dollar last week, we have seen that gold has been doing quite well. Okay, it has been holding the support. Also, silver is.
That's what I wanted to say, but I didn't want to interrupt you. That silver gave us some hints that perhaps something is happening, right?
Yes, exactly. So as long as the money will flow into the other metals, I think that gold will have will hold the support and will probably sooner or later catch a bit with others. So I don't see gold moving to the downside, but rather finding a support a little bit later compared to silver maybe. But I still think that there can be a bounce coming. So maybe we will see a aggressive rally on gold once euro dollar will find a base or stabilize, because as I said, euro dollar has been very sharply to the downside last week, but gold still managed to find a support. So I think that when euro dollar turns up here after this wave B corrective setback, that's when gold may really find a very nice buyers there for a push towards maybe 1260 even. Okay, so I'm looking for more gains, but on the euro dollar short term, we may see a retest of these September levels, because if we consider that I'm tracking a flat correction, that's a 3-3-5 pattern, which means 3 legs down for a wave A, then you have a 3-wave rally here for a wave B that moves to a new extreme, and then you expect a very strong 5-wave drop lower into wave C.
That's going to get everybody trapped.
Yes, exactly. And this wave C will usually stop at this area of a former wave 4. Okay, right there. So I would not be surprised if we see maybe further sell-off at the start of this week, and then once we approach the end of the week, maybe we will finally find some base. We have also non-farm payrolls report on Friday, so maybe we will have.
I have 2 questions for you. One, I remember that you expected the rebound in the treasuries to be like an ABC. So you actually, I was monitoring it as a triangle, and I was expecting a push to new lows. You were expecting a rebound higher, which obviously was also the possibility. But now that we've actually retested the previous lows, do you still believe there is more upside before lower? So you, in essence, do you believe that we're going to see some kind of a double bottom here in the treasuries, or you've changed your point of view and you think that we're going lower first?
I have obviously adjusted the wave count because we have seen a quite aggressive sell-off. So I think that this can be a wave C, which means a 3-wave corrective setback against this previous rise. So despite very weak price action, I would not be surprised if market will find a base. But of course, firstly, we have to consider that we are, as you said yourself, we are moving out of this triangle. So I have to see 5 waves to the downside. We have seen some rally after the Fed last week. Okay, but then quickly market slowed down here.
Exactly.
And now again, we could be falling into 5th wave. So it looks like that there's more downside coming, but at a new low, I would be aware of a reversal. Now, since we are talking about treasuries, I found this historical chart maybe very useful. It's interest rates, and you can see that we are now in phase, obviously, of rising rates and moving to this very nice potential resistance. So it would be very interesting to see what happens here. This definitely could slow down, especially if we consider if maybe stock market is approaching the highs. Okay, for the next cycle.
So should I guess that you're expecting more upside to the USD yen as well, perhaps initially?
Firstly, yes, because we see dollar yen moving here into wave D. Okay, so 61.8% is my first target. This is also, as we talked already 2 weeks back, if you remember, a lot of swing highs there from the start.
Yeah, quite a lot of resistance there.
Yes, exactly. And 61.8%, that's actually a distance of wave A measured from end of wave B. So this is quite close. But still, on the 4-hour, I think that there is more upside coming after a wave 4 pullback. Not sure if we will see such a deep pullback to 112.50, but rather maybe 113 could be interesting support if you consider that current 5th wave up here is quite extended. So in such case, price can retrace back to the starting point of a former wave 4, which was here and not the end point. Okay, so I'm definitely watching this one and could easily see another push to the downside after pullback. After all, we have to track what market is doing right now. Okay, so it's not a top yet.
Okay, mate, that's very nice. What else? I think we might have like time for one or two more markets. What are you watching?
I'm watching cable, or maybe Swiss franc. Let me look at the Swiss franc. Now, Swiss franc, as you know, broke out of the wedge quite significantly last week. We have seen some retest of this trend line here, but market accelerated very quickly, especially when euro-dollar started to show to give way and turn to the downside. This pair just accelerated to the upside, and looks like more gains can be coming, especially after pullback, which in such case could find maybe a support that is all
97.50 is key. 97.50 is key. I think it might act again as support resistance, in this case as support.
Yes, and but also we have to consider that maybe here, I mean, this chart is very, very bullish. Okay, we see a freeway.
Yeah, I totally agree.
I mean, 2 weeks back was not looking so bullish, but
that's what I wanted to say. I want to be honest. I believe that USD Swiss is going to move quite a lot higher, but I wasn't ready. I didn't expect that strong of a pullback, that we got, a few weeks back. So that actually caught me a little bit unprepared, because I was very much prepared to actually buy it. But, the price action, pushed me away.
Yes, okay, of course, you waited on a confirming price action, right? So now this is your confirming price action that market obviously want to continue higher. I mean, this was currently very, very aggressive price and already above previous swing close. So which means that after all, this was a free wave setback.
Absolutely, and I think a pullback, as you mentioned, the pullback towards 97.50 is going to be a very good opportunity. Very good opportunity.
Yes, but of course, sometimes markets are so sharp. I mean, I just remember that when market was breaking extremely higher here at the start of this year, there was no evidence of any significant pullback, as you can see here, not even from February lows, right? So
yeah.
If this is wave 3, then, this wave 3 can be even sharper than a first leg.
Yeah, so that's good. That's very true. That's very true.
Any very difficult to jump into
any view about the commodity currencies? I mean, I know that you were also looking for a low at some point, in the near term on USD CAD. And I know that the Aussie is testing a descending channel again and again. And for sure, one thing can be said about the Aussie: it still remains in a downtrend, but the downside momentum has obviously stalled, right? So, do you think that's an indication that we're about to snap back?
I mean, I think that sooner or later we will see a recovery, and maybe Aussie is waiting on this break higher on gold that I talked about earlier. So maybe that would be a trigger for Aussie bulls to extremely move out of the channel. But definitely, I think that we are going sooner or later to see a corrective pullback to higher prices before we may again turn to the downside. But from a trading perspective, I would not be looking for any shorts here anymore, but rather wait on maybe some bullish evidence. But with that being said, even if I think that Aussie dollar could be headed higher, I would be more interested in Aussie yen, okay, because stocks after all are still bullish, and Aussie yen actually made a very nice break out of this ending diagonal. At the same time, we have seen break above this trend line.
Same with the Kiwi yen, exactly the same with the Kiwi yen. Both of them are broken out, and both of them seem to be consolidating.
So if commodity currencies are headed to the upside, and if you consider the dollar yen is bullish, if you consider the stocks are bullish, I think that obviously maybe we should consider to be long against Japanese yen rather than against US dollar. So also here we see 5 waves up. Probably we are now in a 5th wave. So I'm waiting on this wave to pull back, to unfold, and maybe this could be a very nice opportunity, actually, even maybe for some
back to 80-50 or something like that. Yeah.
Yes.
One last thing before we, Dale is your guest here, by the way.
Yes, sir.
Okay, so one last thing, and before they can start the interview, just, a 30 seconds point of view having to do with what do you think happens to stocks from here, Gregor? Just show us, for example, the S&P, that's the benchmark.
Yes, the S&P 500 is still making this 5-wave recovery up from start of April. It's still not done yet, so which means more upside is coming. Also, even bullish counts suggest that we will see a pullback soon back into this wave 4. But the risk is that we are forming here a wedge pattern on the smaller time frame. So maybe a new high could be retested, and then we see a pullback again in deeper 3-wave maneuver. Also, there was an open gap from Sunday, from last night, which will rarely stay unfilled. So definitely, if we see a spike to new highs, I would be watch out for lower prices as we go or move to the end of the week.
So if I want to recap that, you're expecting that in the rather short term there will be a pullback, but you expect more strength following that before we see a deeper pullback.
Yes.
Is that
correct? Pullback and back to the highs, of course.
Okay, got it. Okay, thank you very much, mate.
Thank you.
Thank you, Greg.
See you all tomorrow. Thank you, Dale. Enjoy the interview.
Right, Steve. Hi, Daniel. I'm going to make you a panelist because I'm going to be showing your website. So we should be able to hear your voice, and then I'm going to show my screen so we could see your website.
Do you hear me?
I can. How are you, Daniel?
I'm very well, Dale. How are you?
Very nice to meet you. I appreciate you taking time out of your day. It's a pleasure to meet you. I'm showing your website here so you could follow along with me. So why don't we go right into it? We had some pretty negative news out of Italy. The euro's been under pressure. Looking at your piece that you're writing here, 5 charts that show the eurozone slowdown, you were really talking about what's happening in Italy, and it's kind of a deceptive thing that they're trying to show that everything's okay. So why don't you delve into that?
Yeah.
And so can I assume that you think we're headed into recession in Europe?
I think that we're likely to see an important slowdown. If you think about consensus estimates, they've been coming down from an estimation of growth around 2% for 2019 to something like 1.7, 1.8% in 2019. Now, I believe that this is extremely optimistic because it includes very optimistic estimates for Italy, but also it includes significantly optimistic estimations for France and for Spain. So I think that what is happening in the eurozone is very simple. Is we've had the entire eurozone has completely abandoned any reform, and what they have and the countries have done is to bet it all on monetary policy. And as the effects, the placebo effects of monetary policy have started to fade away, and you saw in the piece.
Yeah, I'm showing this chart right here, Daniel, one of yours, where you're showing the QE in Europe really started diminishing returns was in 2015. So we kept QE kept happening, and it wasn't having the dollar per dollar impact for quite some time. So Draghi's on his way out. Do you think anything major happens? Because most market participants are looking for them, and how can they begin to end quantitative easing with their economies already slowing?
Yeah, it is quite a challenge. I think that
what the European Central Bank will continue to do is to maintain a very accommodative policy. However, I find it very, very hard to believe, as some market participants are saying, that the ECB is going to increase rates by May 2019. I think that it's very, very challenging, considering the issue of Italy, which is going to increase the deficit, but also Spain. The Spanish government is also announcing that. And there is none of those countries can absorb an increase in rates. So I think that the policy will be very similar to the Japanese one, to the Bank of Japan.
Okay, QE forever. QE forever.
Almost.
Okay,
yeah, almost.
And so actually, what would exacerbate the problem would be, and there are still some out there, would be a continued advance in the euro. Do you have a view on the euro? We had that nice rally from 103 to 26, and then pulled back to 113 a month or so ago, and we're trying to recover. What are your views on euro from the 116 level?
I think that the euro is, every time that it touches 117, 117.30, it goes back down. If you look at a longer term trading range, it is on a long-term devaluation trend since it was at 114. So what you see basically is this sort of bumps that happen from time to time that quickly come back to the trading to the long-term range. And the long-term.
Are you looking for under Daniel? Are you looking for under parity with this continuation? Okay.
I think it'll be difficult. I think it'll be difficult to reach under parity unless you had a sort of breakup type of scenario. But I think that parity is more logical if you think what the euro and the dollar need to be trading at, considering the fundamentals of their economies. The positive side for the euro is the trade surplus. That trade surplus is diminishing as the world economy is not taking so many exports anymore. And the rest of the fundamentals that support above parity are not there, either in the fiscal deficits country by country, either in the elements that have to do with competitiveness, with growth, with inflation itself. No,
so right. If a lower euro would help them in that case. And what about the effect of tariffs on an already struggling economy? How will Europe fare? Will they just look towards Asia to replace buyers of their what they manufacture instead of the U.S.?
It is very difficult. The idea that China or the Eurozone can offset the tariffs in the United States by selling the same goods and services to other countries is simply impossible if you look at the type of consumer that exists in the United States, if you look at the added value of the products that are being exported. So they need the United States. No?
We're not being patriotic unless we're going to the store.
Exactly.
Right, buddy? Yeah. Okay.
So sorry, just to go into that, it is you have already seen that exports are slowing down, non-Eurozone exports are slowing down, whilst imports are rising. So I think that is difficult to offset with new markets.
Okay, and higher prices for countries that have weaker economies like Italy and Greece and Spain? Are they tariffs going to cause basic things that we need every day, like food and shelter and fuel? Is that going to create any price spikes on those types of goods, tariffs? Because we buy almost everything from China here, so we're expecting that here in the States.
Yeah, not in the Eurozone. In the Eurozone, you have two factors that limit inflation. One is demographics. No, it's an aging, very rapidly aging population. The other element is overcapacity. The Eurozone continues to have around 24% overcapacity, industrial overcapacity. That limits price inflation. What is true is that the Eurozone, as an importer as a big net importer of agricultural and energy commodities, is going to suffer, at least in the short term, from the price inflation in those commodities. And if the euro weakens, obviously inflation goes up.
Yeah, so it makes things even worse.
The way that I expect the euro to move is likely to impact negatively inflation, negatively as in going higher, inflation expectations for the Eurozone.
Interesting. You talked about potential breakup. Why don't we go across the pond to where a real breakup may be happening, and we don't know if it's going to be amicable, and maybe they'll kiss and make up, and at least, be able to raise the kids together. But what do you think about the UK and this deadline of Brexit? And there was a potential compromise news today. You have a view on Brexit here, Daniel?
Yeah, I think that if we look at the pound relative to the euro, the pound relative to the euro is already reflecting a hard Brexit, in my opinion. And I don't think that we will get a hard Brexit. I think that we will likely see a compromise. What we're seeing right now is a little bit like the alleged trade war between China and the US. Is a negotiation process made under media headlines, no? But the negotiation will happen. So I think that we are likely to see a negotiated process that will be mutually acceptable. I wouldn't say mutually beneficial. I think that it's not going to be ideal for anybody, but I think that it'll be negotiated. And I think that if you see that the pound has been sort of bouncing at the levels at which every time that there is a perception of a negotiation, I think that is what it's reflecting. It's reflecting that that there is already, you have already sort of embedded in the valuation of the pound that the situation would be the most aggressive. And I think it will be a lot more negotiated, a lot more diplomatic.
So do you have an overall bullish view of the dollar against almost everything, the whole world?
I have an overall view of the dollar index going back to plus 95 levels. And I think that
we're there.
And it needs to go, it needs to confirm that. Remember that every time that it sort of fiddles around that level.
Yeah, there's a pivot. There's some nice pivots around 5.5 before we went to 97 and after. So you're saying over 95.5 would be a bullish event, and you'd look for the dollar to make new highs.
That I think, and that is consistent with my view of a global economy slowdown, but not collapse or recession or big crisis. Simply the evidence of the imbalances built by emerging markets, by the Eurozone itself, and by China in the last 8 years. So that would sort of help the dollar drift back to sort of the previous high levels.
Okay. I have to do it. I don't know if you have a view on it. I have to ask you what your view is on the crypto phenomena, and if you think some of these currency crises where people used to go to gold and silver and look for other havens against their fiat. What's your view? Is it all hype? The technology? I've heard rational arguments on both sides. What are you telling your subscribers, Daniel, about crypto?
I think that there are rational arguments on both sides. I always say we have to split cryptocurrencies between whether they are currencies as reserve of value and means of payment, or as financial investments. As financial investments, obviously they are, and they have to be, extremely volatile. These are startup currencies. What I believe is going to happen is that as if you look at the denationalization of money that Frederick von Hayek mentioned many, many years ago, is that he already mentioned that most of these cryptocurrencies will disappear. And some of them will actually become real alternatives to fiat currency.
Interesting. Yeah, kind of like what happened in the dot-com bubble.
Exactly.
Most of those went away, but a few of them ended up being dominating in our society, our world, and everything we do.
Exactly, because if you think about it, what is missing for most cryptocurrencies to become real means of payment is precisely a reduction in volatility and a widespread level of utilization from manufacturers. I think that if you're looking at what is happening with emerging market currencies, it is very interesting to see how citizens in Argentina, in Turkey, in Brazil, in the countries that have seen the biggest collapse in their currencies, they have been equally looking as an alternative for gold and for cryptocurrencies. And I think that that is showing how they are starting to become, for the weaker currency countries, an acceptable alternative. But I think that, again, we need to think about them as startup currencies. The vast majority will disappear. A couple of them, maybe three, will actually thrive.
Okay, interesting. You have any kind of time frame on how long that shakeout may take? And then I have a question about some of your prolific writing, Daniel.
Thank you. The first thing is, I think it'll be a process that will happen in the next 5 years.
Okay.
The next 5 years are going to be crucial because the massive monetary expansion that we have seen in the past 8 years will show its true face, its real consequence in the next 5 years, whether it is debasement of major currencies, whether it is stagflation, whatever it is, that is going to be the test for these alternative currencies.
Interesting. Okay, so we have a lot to look forward. Historic markets in the next, up until, I know a lot of people are talking 2022. A lot of cycles coming into play over the next 4 years. I'd like to ask you, this is an interesting title to me because, I lived a life in the financial markets. And I'm sure that this book would at least teach people that life in the financial markets is not like the movie Trading Places or Wolf of Wall Street, right?
Absolutely. Absolutely.
All right. So in this current environment, Daniel, of your writings, what do you think would be a good start for our viewers, listeners? What book would you recommend so that they're, kind of prepped for what we're living through now?
I think that Escape from the Central Bank Trap, which is now on its second edition, including comments about Argentina, Turkey, and the yuan dollar trade war. I think that this one is probably the one that touches upon most of the things that we discussed and that were discussed in the previous minutes when I was listening. No, so I think that this one can be quite interesting, especially for the audience here that is, that knows about markets and knows about trading. I think
actually, isn't that a mantra of the people that are, touting the great escape from central banks as being crypto?
Well, it is, but it's not. But I'm not going to tell what I say at the end of the book. But are not necessarily. We have to be careful about that. Are not 100% necessarily the solution or the end game. And I think that I explain it at the end.
All right. And besides your books, you have a subscription model here where people could follow you, follow your writings, and etc. So, is your website address your name? www.
Yes, www.dlacal.com, and you have you have a part in English and a part in Spanish, so no one can complain about the languages. So
okay. Wow, I wish I spoke Spanish like you spoke English, Daniel. What a great interview. I really appreciate you coming and sharing. I encourage people to sign up for your letter if you want a good fundamental view. I know we look at a lot of charts in here, but that's only half the picture. I recommend you go to Daniel as a great resource for what's happening in the Eurozone. And I'd like to call you my trading warrior brother now, Daniel, and perhaps we could do this again down the road. Thank you for your time.
You bet. Thanks for having me, and thanks a lot for the work you're doing, Dale. Great.
Thank you.
Great. It's been great. Thank you so much.
Thank you. Okay, everyone. So we'll see everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. Remember what I said. If you buy the market, because of NAFTA, you might get the shafta, but actually, let's take a quick look at what the metals are doing before I say goodbye. So they're starting to give up their gains. Gold is still holding Friday's low. Here we are, we're still at 88. So silver's struggling a little bit more, and we'll see what happens tomorrow. Good hunting the rest of the day. See you in private member chat. And remember to go out and smell the roses. Don't sit in front of your workstation all day. You could always get us right on any device you could carry with you. Adios, everyone. Remember, last couple of days to get on board with the sale is the last couple of days today. You're very welcome, Paul. Thank you, Daniel, for being with us today. And everyone, good hunting.